Thank you very much. As we quickly move away, we will have two MOU signing ceremonies before we begin our next session. These are very, very important occasions where institutions come together and they join hands in forming new partnerships, new collaborations for the benefit of the industry in general. So the two MOU signings that we have are very, very important. We are slightly pressed for time as well, so I would request our friends to please let's wrap this up very quickly, because before lunch we have one session and one report to launch, inshallah. Okay, so the first MOU that is being signed is between AAOIFI and Afghanistan Banks Association. It is the banking association of Afghanistan. As all of you know, Afghanistan is moving towards converting its whole economy to Islamic, and they are forming a collaboration with AAOIFI in making sure that they are able to achieve that very, very optimistic task that is very, very important for the industry. So to sign the MOU, may I have the pleasure of inviting the Secretary General of AAOIFI, Mr. Omar Mustafa Ansari, to please join me on the stage. And may I also have the pleasure of inviting Mr. Najibullah Amiri, the Executive Director of Afghanistan Banks Association. And can I also have the pleasure of inviting Dr. Yousuf Saleem to please join us from the Central Bank of Afghanistan. Please join me in applauding or in praying for the goodness and barakah of this important collaboration that is being formed between AAOIFI and Afghanistan Banking Association. Mr. Najibullah Amiri would also like to share some key aspects on the development of Islamic banking and finance in Afghanistan. So please, I welcome you, Mr. Najibullah, for very, very brief remarks.
Bismillahir Rahmanir Rahim. Nahmadu wa nusalli ala. Dear esteemed delegates, distinguished guests, it is a great honor to say a few words on this August gathering. Taking this opportunity, I would like to extend my warmest greeting to the colleagues from the Afghanistan Bank, His Excellency Governor. I would like to extend my heartfelt gratitude to the organizer and sponsor for their invaluable efforts in making this significant event possible. It is an honor for me to present the Afghanistan Banking Association signing ceremony with AAOIFI. As we have signed the Memorandum of Understanding, we embark on a vital journey to strengthen the Afghan banking sector and deepen our commitment to Islamic banking principle. I kindly urge our partner at AAOIFI to reconsider the high cost associated with their services. Your understanding and support will be crucial for our progress. Indeed, capacity building for transition of Islamic banking is one of the most critical needs for Afghanistan's financial sector. We have a golden opportunity at this moment as the Islamic Emirate of Afghanistan fully supportive and committed of Islamic finance initiative. Together, let's ensure that this partnership fosters meaningful collaboration and paves the way for a resilient banking future in Afghanistan. Thanks a lot.
Thank you very much, Mr. Najibullah. I'm very, very thankful for your time. Thank you, and we hope that this definitely fosters new collaboration, open new avenues for potential growth for the Islamic bank and finance in Afghanistan. Then the second MOU that is being formed is between AAOIFI and Ajman. Ajman Bank has actually undertaken a very, very important step towards making sure that all of their staff is certified in the certificate of proficiency in Sharia standard. And it's a very important collaboration between AAOIFI and Ajman Bank to sign the MOU, the agreement. We have Mr. Mustafa Al-Khalfawi, CEO of Ajman Bank, and joining him is, of course, our dear brother, and very, very kind of, inshallah. So please join me. Thank you very much. Very, very kind of you. Please join me in congratulating them for this very, very important collaboration. And we hope that other banks and financial institutions will follow the suit, inshallah, in making sure that all of their staff are trained in the Sharia standards that are mandatory for a number of jurisdictions around the world. So we wish you all the best, inshallah. Thank you very much, Mr. President of AAOIFI, much for your time. Sayyid, can we change the chairs, please, now? Please change the chairs. So we are slightly pressed for time, so I'll not go into a lot of introduction, but the next session is very, very important, a very, very pertinent one, and it focuses on the development of Islamic economics, banking and finance. Of course, Islamic finance, as all of you are aware, is more than Islamic economy, is more than Islamic finance. A whole ecosystem that is developing very, very steadily, that is fostering the growth in different parts of the world, a term that we use, global Islamic economy, which combines the halal sector, be it be pharmaceutical, be it be halal travel, be it be media creation or cosmetics, together with Islamic finance forms this overall global Islamic economy. Of course, a lot of concentration stands within Islamic banking and finance, and of course that has developed a lot in different parts of the world. But there is a potential for Islamic finance to move away from global Islamic economy, which is very, very pertinent. And of course, a number of different countries have taken important steps in making sure that the economy grows away from Islamic finance, or using Islamic finance as a stimuli to growing the Islamic economy overall. So the next session, inshallah, will be on that, leveraging Islamic finance to transition from halal finance to halal economy. So joining me will be a very, very illustrious panel, mashallah, who again have spared a lot of time and joining us from different parts of the world. May I have the pleasure of inviting the chairman of the session, Professor Muhammad Kabir Hassan, who is a member of Governance and Ethics Board at AAOIFI, and of course a professor of finance at the University of Orleans, who's traveled all the way from United States to be part of this conference. So please join me, Dr. Kabir, on the stage. Joining him, we will have Mr. Farooq Raza, the chairman of AAOIFI Governance and Ethics Board. Please join me on the stage, Brother Farooq. Very, very instrumental role in the development of Islamic banking and finance globally, and more importantly, in the emerging markets where halal economy is definitely growing. We also have Mr. Ehsan Owood, Secretary General of the Standards and Metrology Institute for the Islamic Countries from Republic of Turkey. Please join me on the stage. And we have Mr. Firas Hamdan, the Executive Director of Human Resource at Bank du Liban, the Central Bank of Lebanon. Very, very distinguished speakers, leaders who have joined us, and inshallah we'll use the opportunity to see or hear their thoughts on how that transition can happen away from to Islamic economy, or using Islamic finance as a source to grow the overall Islamic economy, inshallah. So with that, I hand it over to Professor Kabir Hassan to take us through to the next session.
Bismillahirrahmanirrahim. I welcome you all to the first panel session titled Leveraging Islamic Finance Transition from Halal Finance to Halal Economy. And with me, with the distinguished audience, we have three very important persons as panel members. We have Mr. Ehsan Owood, he's the Secretary General of the Standards and Metrology Institute for the Islamic Countries. It's an OIC outfit, Republic of Turkey. We have Mr. Firas Hamdan, who is the Head of Human Resource, Central Bank of Lebanon. And of course, our dear Farooq Raza is the Chairman of the AAOIFI Governance and Ethics Board. So just some role, we have 70 minutes for this session. So each speaker will get roughly 10 to 12 minutes. So I'll run it into session, then I'll open the floor for discussion, and we will entertain questions from there. So I want to make this session as an interactive session. So with this, let me just start set the tone for our discussion. And we are going to follow according to the order that I mentioned. First, Ehsan will talk, then Firas Hamdan, and finally Farooq Raza. So the 1975, the official time Islamic Development Bank came into existence. So interestingly, the forefathers of Islamic finance, when they envisioned they want to lead their financial life according to the Quran and Sunnah, no riba. But at birth, this halal economy and halal finance, the two ends got separated. We never really talk about halal economy, and recently, for the last few years, it is becoming attraction, because Islamic finance falls under the halal economy system, and within this thing, finance is one part of it. Just recent figures, there was just to let you know that recently there was the numbers that has been published by Dinar Standard comes up with the global Islamic economy. And if you look at this global Islamic economy, it's roughly around, if you look at the halal industry, is about $2.5 trillion, another $4.5 trillion Islamic finance. So Islamic finance has taken over the entire Islamic halal ecosystem. Now, of course, not every 57 OIC Muslim countries are equal partners of this. Only 5 countries maybe are doing a lot of trade and in this sphere, like UAE, Saudi Arabia, Turkey, Indonesia, and Malaysia. But the governments of a number of Islamic countries are playing a very critical role to promote the halal ecosystem. So whenever we talk about Islamic finance, those are the Sharia scholars, we look more like what the Sharia, nusus, or talk about this structure or the legal form of this Islamic finance. And one of the questions that I asked in the previous session, how can make it 2%? One of the problems that we face, that product development that really conforms to the essence of Islamic finance, that's the role. But we want to make it halal, little better, that we need to bring not only negative prohibition driven, We also want to bring the positive aspect of Islamic finance, but we want to take another trajectory called Halal al-Tayyibah is even better. Now the question is how we can leverage Islamic finance in order to promote the halal ecosystem. When we talk of the halal ecosystem, that we have a lot of demand side and supply side factors that really can improve. If you look at government, we have a very young population among the Muslim countries. We have also affluent population, and we have the digital economy crowdfunding that the other speakers talked about. We have also interaction. Now the supply side, the many governments of the country and also driven from the consumer or the citizens of the countries are asking for a halal lifestyle. When you talk about the halal lifestyle, it goes into different aspect of it. For example, you have halal logistics, halal food, halal medicine, halal vaccine, halal animal feed, halal cosmetics. So you can name it. So even the Islamic finance has taken over out of 7 trillion, about 4.5 trillion, more than close to 60%. How we can bring the Islamic finance to help the halal economic system. Interestingly, the 3 largest beef exporter in the world happens to be Brazil, Australia, New Zealand. But if you ask them how they produce their halal beef that they supply to the rest of the world, are they using halal finance to produce that halal beef? Now, many often in one of the panel sessions, Germany. Now the question is how we can bring this halal economy into the system. Now SME, if you look at the food industry for example, SME crowdfunding is a new methodology fintech we're using, is to we say these SMEs are not too big, it's not good for VC, it's too risky for banks, or it is small for Islamic microfinance. The question is how we can bring that halal finance or Islamic finance to promote halal economy. Now one of these things that I mentioned, lack of instruments, Islamic banking. There is also poor awareness of Islamic banking among the halal players and poor intra-OIC trade and sukuk targeting the halal industry. With this introduction, I want to start with our first panel member, Yousuf Saleem. You please shed your light on this topic in general.
Bismillahirrahmanirrahim. Thank you, Mr. Moderator, Professor. My name is Isanut, as my moderator as well, and the Secretary General of the CIMIC. I want to convey my best regards from the standard bodies and the OIC institutions. For the halal economy and the finance relation with the products and the other issues and generally, despite the commendable growth in Sharia compliant finance, standardization remains a major challenge. For other halal lifestyles, unified standards are key elements. If we need, first of all, we need products. If you don't have products, you don't have sale in something, you don't need finance. You maybe have a lot of money, but if you are not charging this money, it's empty things. Then we have to back to economy. Real economy is products based on the travel of products. Our products should be halal. How we will finance these producers, these products, elements to be fully halal for Muslims? We have to know that halal for Muslims, not the alternatives, is a must. Because Allah says, eat halal and tayyib together, not halal and not alternate together. halal is clear, but tayyib, sometimes we are mixing many things. What is really tayyib, what is not. Yeah, from the finance, from the daily life, many things, najasat, etc., purity, many things we have to think on the Taiwan side. That reason, in the standards, we have to agree on same conditions. If my products and your products are not produced with same classification, same such real condition, we cannot exchange. The two standards are key rules for the free trade. The real economic unions like European Union, other sides, first charter for this unification is based, agree on clarification of standards, certification of products. If you agree on the classification of products, how will a product should be followed, which rules, which criteria, and then we will start to the exchange of goods and then etc. That reason that we cannot separate economy with finance, and finance is different standard. We cannot be separated fully. They are very integrated. Islamic finance is considered previously applied practices. There should also be appropriate method to achieve a harmonized approach through standardization. For that reason, international cooperation and collaboration on standardization are essential to ensure inclusively for contribution of industry players, standards bodies, and Islamic experts from the international academy such as. This holistic approach promotes sustainability, ethical business practices, and transparency. By working in harmony, unified standards will protect the interest of stakeholders and drive the growth of a unified global market and meet both spiritual and economic needs. Acknowledging that unified standards are crucial, as the CIMIC, we are the official organ of the OIC. For standardization, we can provide a platform to consolidate the efforts and the experience gained from the thus far. Furthermore, OIC through the Standing Committee for Economic Commercial Cooperation, COMSEC, has been exerting great efforts to gather all relevant actors in the Islamic finance industry to find the best approach to finding common initiatives. In this regard, COMSEC has established a working group for financial cooperation, which had more than 18 meetings to date. CIMIC is also actively following this, making contribution to the working group. So we will continue to support these initiatives and contribute the most effective way possible. Lastly, I want to say last word. We cannot separate finance and Islamic economy or Islamic lifestyle, etc. They should be all be together. We have to agree on unified standard, and we agree on unified system for halal finance. You cannot say this is our Turkish rule or Saudi rules or Pakistan rules. We first of all we have to have same accounting standards, same methods, and open a lot of banking branches. They are not alternate. They should support each other, as we did in for halal certification and application.
So you are going to answer while you are going to make your presentation, but I want to just shape your thought process, for your deliberation. As a regulator, central banker, how the regulators can play implementing policies and reforms to facilitate the integration of Islamic finance into diverse economic sectors and support the growth of the halal economy. In addition to this, you also shed some light on the sovereign wealth fund and also the fintech technology that is coming in the future, AI that we see.
Bismillah ar-Rahman. Thank you, Brother Kabir. Ladies and gentlemen, brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. Before going into that, I want to talk about some things that were mentioned today that will be the basis to my point of view in response to your question. First of all, we have to distinguish between halal economy and Islamic countries, economies of Islamic countries, because not all economies of Islamic countries are halal economies. We barely have new economies that are really considered Islamic economies. If you want to talk more about it, you can see it in figures. You asked just a few minutes ago the panelists before us, how can we reach 1% to 2% as financial assets, Islamic financial assets out of the global financial assets. Although the population for Islamic people is 23%, around a quarter of the global population. But the GDP, as in terms of GDP, it's like 5% of the global. Even there's no equality there, there's a difference in the ratios. But the 1% of the financial assets out of the total, that means we have a gap. We have a GDP of 5% for the Islamic countries of the OIC, but yet we only have 1% of the global financial assets. So we are still far from there. Before we talk about the global financial assets, let's talk about the Islamic countries first and the GDPs and the ratios with the GDPs of the Islamic countries before we go even to Brazil or any other country. Let's start with ourselves first, then go to others. That's first at this point. Now, what's happening is that these countries, for Islamic countries, mostly still rely on capitalism, socialism, not really going to Islamic economy. Okay, and if I want to relate it to my experience, when I first introduced to Islamic banking, it was in 2005 that's when the legislation of Islamic banking started in Lebanon. It was issued in Lebanon. I was excited and I wanted to go into it because I felt it's based on real economy. Because when you say it's asset-backed, asset-based, so we are talking about real economy, not fake or leveraged financial economy that we have. Because financial economy is that we have currently, every couple of years, bunch of years, we have a crisis and everything is changing. But if we rely on real economy, which is the Islamic way, when you have asset-backed, asset-based operation and products, that will be safer, stable, sustainable, and more effective. Now, to go there, there's what you call it, deficiency, or we are late in going there because everyone says we don't have the expertise, especially for scholars and Islamic experts and so on. But if I noticed yesterday in the opening of the capital, building capital week, Brother Omar mentions that AAOIFI has currently around 450 plus experts working with them and like yourselves. That means for one institution having this number, and even in the panel before, Dr. Saleem was mentioning how many experts that there exist in the market now as in view of the IDB. So we have this expertise, it exists now. Reason or Arabite to say we can't go there, we can improve ourselves. Now, what I noticed that what I mean real innovation is that we rely on Sharia basis to innovate. Rather, the innovation is focused more on mimicking or Islamizing conventional products. That doesn't mean that it's not Islamic and it's not Sharia compliant. No, it's fully Islamic and Sharia compliant, but the basis starts from there. That's why
till now, we focus on sukuk. But a lot of people, when you say sukuk, first thing they say, oh, Islamic bonds. The first thing that come into intention, their intention is that we are talking about Islamic bonds. What we need more from the experts is to innovate, really innovation, based from basic operations of Sharia that will give us new products that we can go for it. So we need the expertise, we need more awareness for the people to be aware about Islamic products, new products, or existing developed products, and for them to assess, do they want just a profit or they want this profit, even if it's less, with Sharia flavor, with Sharia compliance products. When we have this mixture, now we'll come to the regulators. Now regulators can step in and lead the way. Okay? We need the triggers. So, for example, I will give a small example as trigger. Unfortunately, due to Gaza war and the boycott, what happened is that people went into new products, and even if not new product, all existing, but they didn't go with the traditional products. So these products emerged, and we have in the market new products for that. We don't need really for this tragic events to give us a trigger to go there. Regulators, legislation, and so on can do that. But to do that, we need the market also with us. As mentioned in the earlier session, IDB said that we need the market to lead. So it's not always regulator, the interference of regulator is a healthy issue to do, but yes, it may be a trigger when you have the ground for that. You have enough expertise, you have awareness, and they can work on that. Then the regulators can come with their regulations to favor Islamic products and so on. When you favor these Islamic products, gradually you will be transforming the economy from conventional economy to halal economy, because you introduce more halal products that you can work on through Islamic finance.
The question that I had in this morning, how can we make 1% to 2%? We really need human capital. Those who can come up with new products, Sharia compliant, helping the halal economy, closing the gap between halal finance and halal economy. Having said this, now I want to turn to our brother Farooq Raza. I know Farooq has something to say, but I want him also, if he could channel his thoughts, how the Islamic social finance can be integrated, such as zakat, waqf, sadaqah, to halal initiatives with social impact. So if you could also add something with your deliberation.
Thank you, Professor Kabir. Bismillahirrahmanirrahim. Assalamu alaikum wa barakatuh. Right. For me, I think there is a more fundamental question. How do we define halal economy? So, the general perception that I see in the market, people are referring to halal, to modest fashion, to halal food, to pharmaceuticals, maybe cosmetics, and, some tourism. This is halal economy. I completely disagree with this, because I believe that as Muslims, everything that we do about, our economic activity has to be halal. And, whether we are an employer, whether we are an employee, whether we are a trader, whether we are a financier, whether, whatever, we have to think halal and we have to live our life, in a halal way. This is not a question of choice. This is an obligation for us. This is mandatory for us. We cannot get away with just doing, this is not a la carte system where, okay, so this thing in my life I want to have halal, and this thing, it's okay, to have haram as well. No, we actually cannot have this. This is the way I think we need to think, and this is how we have to shape our policies also, in our jurisdictions, in our countries, in our organizations, and in our families as well, right? So, I think this is the first and the foremost thing. So I think we need to think wider about halal economy, and let's not limit ourselves, in these 5 or 6 sectors. Everything to do, whether it's just livestock, for example, it can be production of, I don't know, maybe some mechanical parts, but that has to be also halal in a way that it's finance halal. The human resources actually being dealt with in a halal way, and so on and so forth. So if I come to your specific point, Professor, I think this is a very, very important point here that a lot of times is actually missing. And this social finance, whether it's zakat or it's sadaqat or it's waqf, or even there is actually a very big amount of money within the Muslim community around the world. And I think Brother Firas, he mentioned that we are almost nearly quarter of the world population. Among all the Muslim communities around the world, there is one big amount of money sitting, and that's our Hajj savings, right? So all this money is available, and it has to be channeled in a way that it actually helps with the objectives that have been set out by Sharia already. So why we have poor people around us if everybody is actually paying their zakat, and everyone is doing their discharging their duty as their neighbor, as the employer, as the job creator, as the government official, then there shall not be poverty. And people who are looking for opportunities, they shall be helped. But unfortunately, this is not helping. This is not happening, and this is due to the lack on the policy side. Now, let me share my own personal experience. About 10 years ago, I think IFAS, the company that I represent, was commissioned by ISDB actually, right, for the government of Indonesia to develop the world's first national master plan for Islamic finance. So before that, there was never any national master plan done for any country. So Indonesia, being the largest Muslim country by population and a G20 economy, they decided to do this, and the project was commissioned to us. Now, when our team went to Jakarta and we started the project, we were actually quite surprised, rather astonished, to see that in the scope they have given us, not only banking, non-banking, capital markets, etc., 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 but there were also the religious funds. So we asked them, brothers, what do you mean by these religious funds? So they said, we want you to look at our Hajj funds, our zakat system, our waqf, framework, and our they call it anfaq fi sabilillah or sadaqat, etc. How we can bring this into our financial sector. So that was very interesting, and that was very challenging for us as well, because to be honest with you, until at that time, we were always, as consultants, we were thinking of the financial system, the financial institutions, other things, regulations, etc. But we actually did not think of this, that how it shall be integrated as well. So cut the story short, we had to work very hard. We had to be actually challenging a lot of status quo, and then we came up with some innovative ideas, and that helped tremendously. There was a huge amount, multi-billion-dollar worth of money that was actually sitting in Hajj savings, and that was actually not doing anything for the country or for the people. So we had to create, we had to do a lot of reforms introduced in the master plan, and then on the back of that, the first time, on the likes of Tabung Haji in Malaysia, Indonesian government also set up their Hajj fund, and that Hajj fund actually, started deploying, those savings into the money, into the economy, and plus, there was, we also introduced a zakat system that will be also helping, and waqf also to help the entrepreneurs as well, right? So this is something that has helped tremendously in growing, Islamic finance sector in Indonesia. When we did the master plan, it was at 4.9%, the market share of Islamic finance in the country. I was recently in Jakarta, I think like 3 weeks ago, and they told me that in 8 years from the rollout of the master plan, they have actually managed to more than double the market share. So currently it's 11.4. So this means actually, and they also told me that the social funds or the religious funds have actually played a key role in this growth, because now people have started seeing the value, right? So it's not only just about Islamic banks or the central bank doing something, or the sukuk being issued. So all this is happening, and of course this is very much required, but people have started seeing the value, especially coming from the religious funds and the social side as well. So this is something that can be actually, it shall be integrated fully to the system.
Thank you, Brother Farooq. Actually, I'm very...
Thank you, Brother Farooq Raza, for your very nice deliberation. I just want to, of course, what is halal? I just want to quote something from our Quran, Surah 5, Ayat 87 to 88, English translation. O you who believe, forbid not good things that God has made lawful for you, and that do not exceed the limits. Surely God loves not those who exceed the limits, and eat of the lawful and good that has God given you, and keep your duty to God in whom you believe. So of course, the concept of halal life, halal economy, everything comes from the Quran and Sunnah. That's the starting point. Now the question is, we are talking about the halal economy. Now the brother Firas Hamdan, coming from central banking or banking regulation perspective, that we really financialization, real economy versus financial economy. At one time, if you look at the world real economy and financial economy, it's about 50 times bigger than the real economy. So the money is chasing too few goods, and we do not want to fall under the same trap of Islamic finance. Instead of helping the real economy, it's leveraging the real economy. We want to get away from this, and from where he was emphasizing product development. And we need this talent. We need these people, scholars, the future, that who understand Sharia, who understand modus operandi of financial transaction, and also who understand fintech. Because without fintech, the future will be bleak. But my question actually in the morning that I asked, how can we make 2%? What I see, our investment of our future talent development has been not to the expected level. AAOIFI is playing a very important role, but that is not enough. We really need to start with the academic institutions. We need to change our curriculum so that we can build the scholars who can come up with the financial instruments based on Sharia, which can help the real economy. Now with this thing, I know we are getting late. I want to open the floor so you can ask question any of this member, but Firas, you want to say something? Yes.
I didn't answer about fintech, and you asked earlier, where are we after 50 years? And you related that to AI. Well, according to the way it's going with AI, I think after 50 years, we may be sitting there, but robots will be sitting here instead of people. So we need fintech, we need AI, but we have to be careful there where we are going.
No, actually, when we talk about regulation, we say that the market has to come forward in order to help them, but sometimes the regulators also have to shape the market. Like the AI, if you really do not really channel the AI development, it might really eat us up, and that will be more detrimental than anything else. Thank you, Firas. We missed one part of the takaful part of developing or finding the bridge between halal finance and halal economy. If any one of you can shed light on the takaful role, how it can play.
Okay, so thank you, Professor. So let me share with you, Alhamdulillah, I have been exposed actually to, many different jurisdictions where we have tried to help build this Islamic finance ecosystem. And takaful is always, something that actually usually gets ignored or overlooked because, it's perceived to be a small thing, but it's not actually, because this is something that has the potential to help not only the individuals, the businesses, but also the whole country and, the society to be stronger and to be more resilient. Now, one of the things that I see as a big challenge is actually, the lack of vision that I would say in any given jurisdiction. where people will make claims that oh, we want to be the hub for Islamic finance, we want to do this and we want to be that, but there is actually no real plan. So how we are going to do that, and what are the components that we need to have in the jurisdiction? How do we build this ecosystem? I've seen in many countries, where they have issued, for example, an Islamic banking law, right? And then they sit back and think, okay, so now the market is going to evolve on its own. How many banks opened, Islamic banks opened in that country? None. Because law is not the only only thing that you need in the jurisdiction. Similarly, you will have a small, takaful operator starting, but then there is lack of regulation, then there is, lack of investment opportunity. This is the biggest killer for any takaful operator. There isn't enough, liquid assets available, investable assets available, to the takaful operators. So it's actually the responsibility of the stakeholders of the market to think about these things and to bring all these things together, because they support each other. So we cannot expect, Islamic banks to grow or Islamic businesses, Islamic economy to grow if there is no takaful there. But to make takaful work and operational and make it, sustainable, we also need to give them the opportunity to have different investable, assets as well. And this is, something where a lot of policy intervention is required. And that policy intervention will actually come from the vision. And that vision shall be, a much comprehensive one, a bigger one, where, we think about all these things and we provide, we bring the provisions, to develop this infrastructure and the ecosystem.
Thank you, Brother Farooq. I just want to ask one last question to
you are representing an organization and you have Halal Summit every year in Istanbul. Now, what sort of policy framework from your organization along with OIC as an outfit that you can think of, like establishing special economic zones or halal hubs that can integrate Islamic finance, halal standards, and targeted business incentives?
Thank you very much. You have to know that as Islam first came to us, Muhammad sallallahu alaihi wasallam prophet time, two peoples. At that time, people was rich. Now people are poor. People are workers. Company is rich. Each family has a company. Family members, a worker company. We have to change our company to Islamic ID. Because we are not concerned. We are just looking at people, but companies destroying our Islamic life. That reason in the CIMIC, we are with member states, we are producing standards for companies. We are not looking just for people, Sharia institutions like academies or religious ministers are not for the people, change, advise them. How we will have for certification bodies a real ID, Islamic ID, certification and producers, and then finance, and from the finance to last production, how will be sure there is nothing against Islam, against Quran, against Prophet words, Sunnah. Standards together from the beginning to end in our life, all part of life, what our members need, we are studying them. Till now we have developed 20 standards, majority for the system, how we establish a real system. We are sure this company producing halal products from finance to final product, and then how we will see as a traceability. For example, you are seeing the market, you are buying a logo with halal logos products, you say it is halal, can eat. Tomorrow if you are checking the labs, you see any wrong things, any pork, DNAs, etc. What will you do? Someone to be punished, some to be degraded. They are playing with the people, because we have to know halal is as ibadah, but not anything. Halal finance is we have to be see as a must of Muslim and the full economy from all parts of economy, because Allah says only eat, only drink, only consume halal things together. For your questions, now we are studying on the many standards from pharmacy to
as you say, hub, but not easy to make consensus. We have a lot of different culture from Africa to Asia, from Europe to Middle East, but we have to, as a Muslim, be unified in short time, not many years, not 15 years, not another years. And then we have to promote halal finance not only to Muslims, to all community. Because Allah said, Ya ayyuhan nas, all people, all humanity should consume halal. Tomorrow, we don't know who will be Muslim. It's our own responsibilities. Thank you for this question.
Thank you, Brother Ihsan. You know, Indonesia, every month, the October, they declare the Sharia economy month. So they are trying to promote Islamic economy as a whole holistic way, not only the Islamic finance. And probably we can learn from the Indonesian experience. I find this very interesting. It's not only in Jakarta, it's all over the Indonesia. They have different activities happening. Now with this, I want to open the floor. There are 3 questions, one from this side, one in the middle, and one in the on my left side. So in the middle one. Let me start with the middle, brother. Yeah.
Assalamu alaikum wa rahmatullahi wa barakatuh. Dr. Mansour, Head of Sharia of Bank Najma, Sultanate Oman. I think that the important strategy to achieve this goal is the regional and international integration by enhancing the cooperation between the Islamic country to develop the halal among their countries, and unifying the standard and the specifications, and facilitate the trade and financial between or among the Islamic countries. This is the important strategy, I think, that to serve this goals. Thank you.
So thank you. So it was not a question, just your assessment. Thank you very much. In the back behind you.
Assalamu alaikum. Hisham Al-Tuhami Abdullah Suleiman, Sudan. Deputy CEO from Nile Banks in Sudan. Thank you for the distinguished guests and thank you for the speakers. I think this is a very important issue. Now there is a big difference between Islamic techniques of finance and halal economy or Islamic economy. We have another point of strength in our Islam, just like waqf and zakah وكل هذه نقاط القوة. How we can bridge the gap and how we can integrate between these and the Islamic techniques of finance and the products and the other products to build a very strong economy, and how this techniques of finance can affect the macroeconomy in our Islamic economy. Thank you very much.
I just want to share one piece of information. I was in Saudi Arabia, and there is a AAOIFI authority, and they have done a study in Saudi Arabia about $495 billion of AAOIFI. Those are registered with the Saudi government, but those are registered and unregistered is about $1 trillion. And Brother Farooq Raza was talking about that issue in the context of Indonesia. Now the point is the amount of money that we have in Waqf. Now you have to employ those properties so they generate enough revenue that can help the other sectors. Unfortunately, we are not very good in managing what we have, and we need to really look into this thing so that we can generate money and that revenue can help, promote halal industry, the gap between halal finance and Islamic economy. So that's the point Brother Farooq Raza have mentioned. I just want to add something. There's another hand was there. Please, brother. Yeah.
So, firstly, I do agree with the standardization across all of Islamic financial institutions. I do agree with it has to cover all of our economy, every aspect of our living, and I also do agree with the unity. Now, there is an initiative that is enforced in a lot of our institutions. It's ESG, which is environmental, social, and governance sustainability. What that currently is being enforced is with Western principles. What it's missing is Quran and Islamic principles. What we should be doing is enforcing our way within all our industries, within all our institutions. What is your opinion of that? Why do we continue to follow Western, where Islamic, Islam from olden days, a lot of knowledge, a lot of education, and everything else came from Islam? Why do we still need to follow Western standards?
I got your question, so thank you. One more question from that side, and then I'll ask the panel members to answer.
Assalamu alaikum. A question to Prof. Kabir and the panelists. I would like to give an antithesis question actually. The topic is Islamic economy, which is very vast, and I think as of now, it is remain as a theoretical. The Islamic finance institution right now, whether banking institution or takaful, we breathe within the capitalism and fractional reserve banking. For as long as it is there, forget about Islamic economy. So now, we would like to learn from the panelists. From your point of view, even though it is hypothesis, right? What's your thought on alternative to this fractional reserve banking? For as long as it is there, Islamic economy cannot function within the capitalism. Thank you.
Okay, excellent. So we have two questions on ESG. I mean, ESG is very much in Maqasid al-Sharia. Actually, West has borrowed ideas from us. So that will be my short answer. About you, I brother agree with you fully. You know, the Quran, Allah has forbidden riba, but Allah hasn't said, give me a bank. So the bank, the construct is our human construct, and we have borrowed an idea from conventional banking system, fractional reserve. Even the Western countries, you know, they have the thoughts about how, because all the instability that happens, financialization that happens because of the fractional reserve banking system. I agree with you fully, brother, with you. If you want to have real Islamic economy, the real economy that you're talking about, non-leveraging, non-financialization, we really need to get away from the banking model. In order to get the essence of Islamic finance, we really need to develop non-banking Islamic financial models. Unless we do this, we will not be able to integrate the real economy, Islamic finance, halal economy, whatever you name it. And I want to give floor to each of my panel members to answer any last thoughts or any of the questions they have raised.
Just to the brother who asked about why we wait for the Western to give us some products or some new innovations or something like that. Because I don't know the answer, but I know we have a lack in that, and we should have been more advanced before the Western. So you see in the surah, in the story of Yousuf in the Quran, when the Prophet asks his children to go from different doors, this is risk mitigation. When you have diversifying risk, and when you set the wheat and when the first 7 years till the next 7 years, that's provisioning. It's there from 15th century ago, but we didn't take it. We waited till others started talking about diversifying risk and risk mitigation and provisioning.
Thank you very much. I'm not from the banking system. I'm just a regulatory authority, standardization bodies. That we can say we have, as we are Muslim, our responsibility is very high because all forbidden in Quran for Muslims. We cannot look the why non-Muslim are eating riba, other systems very bad, etc. We have to help the Muslim, and where the Muslim living, we have to serve to them. If you have a banking, I have to go to London, I have to go to other countries, open branch, and help the Muslim, local Muslim there. We also know there is no any Islamic food, halal food or not halal food. Islamic food, if you say today Islamic food, tomorrow another religion will start their religious foods. We don't have any holy food. We have a holy book and Sunnah. We have to have halal food. With terminology, we don't have many we are not using same terms because the country condition, the secular system make breach, forbidden for you use the Sharia, etc. We all Muslim, we have different conditions. We have to say we have the same. We have meaning same. Meaning should be same. For example, go to Malaysia, they are using Muslim friendly. For me, it's a very dangerous word because Muslim friendly sense is very good, but meaningless. Why? What is meaning Muslim friendly? Halal. Halal is halal. Participation bank is not good terminology for Turkey. They should say halal finance. Halal is enough for us, but we don't have to look alternate. Islamic rules enough. We don't. If you say same thing, Sharia rules. Some people in the West, in the secular countries, afraid Sharia is different like this. There is another Islam. Islam is everywhere. Islamic rules is the same everything. But in the standards and bodies, we have to concentrate on the producers, companies, and products. How there will be assurance of the halalness to serve halal to our members and brothers and sisters and all humanity. Thank you very much.
Brother Farooq Raza.
Thank you, Brother Kabir. There is a saying in Farsi that that means that a perfume, a good perfume is the one that actually you can smell yourself without the seller, the perfume seller telling you that this is a nice perfume, right? The problem that we have here is that we talk a lot about Islam, we talk about Islamic finance, we talk about Islamic economy, but we are those perfume sellers who are just putting the perfume in everyone's nose and saying, guys, come on, tell us how beautiful this perfume is. If it was really beautiful, they will smell it. If people are, if we have to convince people that it is a nice perfume, then we have a problem with our perfume, or we have a problem with ourselves. So the point I'm making here is, this is my concluding remark, that we need to do a stock check of what we are doing, and we need to do also some thinking and some action on how we improve things and how we make this the perfume that smells itself, and that is by creating value through real economy. Now, how do we do that? I think this is a challenge that will probably require a much longer discussion. We are out of time, unfortunately, but this is I think a work in progress, and we all have to contribute to that. Thank you.
Thank you, Brother Firas Hamdan, Ihsan Abud, and Farooq Raza, and the audience for attending and listening to us. And final word from me, we really need to purify ourselves as well. Otherwise, everything else we talk about probably would be meaningless, would not be blissful from God, Allah subhanahu wa ta'ala. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much. Very, very esteemed panel, for your very, very enlightening remarks. It's a pleasure to have you. Thank you very much for spending your time and joining us. I thank you very much, and over and above, I thank Professor Kabir Hassan for chairing the session very, very ably. If you can just take a very quick group picture with a smile, Professor Kabir. Thank you very much, Brother Farooq Raza, for spending your time, Mr. Ihsan Abud, and Brother Firas Hamdan. Thank you very much. Ladies and gentlemen, between the lunch and yourselves is just a very, very brief session. However, a very, very important session, a very, very pertinent one, something that we look up to every year to hear how has the industry performed over the last year, how has the industry grown, and what are the new variables that are playing a more important role in the development of Islamic banking and finance globally. And London Stock Exchange Group has been playing an instrumental role in providing and issuing a very, very important report, what we call the Islamic Finance Development Indicator Report. And this year, inshallah, it is the 12th year that they launched this annual report. And they have been launching it every year, something that all of us look up to and look forward to. So all that growth that we have talked about in this session, moving away from Islamic finance to Islamic economy, we see what has been this growth. So I urge you to please stay with us and hear these new numbers, because tomorrow in Zavia and Islamic Finance News, these are the numbers that are going to be reported. So I am very, very pleased to welcome my dear brother Mustafa Adil, the head of Islamic Finance at London Stock Exchange Group, to please share with us some of the insights and enlightening discussion through this report, which is not just a report based on one variable, but it's a multivariate variables, a number of variables that play an instrumental role in ranking countries based on their development and growth in Islamic bank and finance. So please join me, brother Mustafa Adil. Thank you. Please join me in welcoming. And I promise you, this is the last session before lunch. So, we can have a louder applause, inshallah.
Thank you, Brother Rizwan. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalam ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajma'in. Your Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum. I am delighted to be here with you today to present the key findings of our annual Islamic Finance Development Indicator that is developed as a joint venture between ICD from the Islamic Development Bank Group and the London Stock Exchange Group. As my dear brother Rizwan mentioned, this is the last presentation before lunch. This is the hot seat. And as we are already delayed for lunch, I'm sure it is even hotter. But I do want to take some time to go through some of the key findings of the report. As an introduction, for those who are not familiar, the Islamic Finance Development Indicator was developed as an initiative to measure the growth and development of the Islamic finance industry across multiple key dimensions. Obviously, we look at the financial performance, which is very, very important, and we look at it across the different asset classes of the industry, but we go beyond that. We look at governance in different markets. We look at the increasing role of sustainability. We look at the knowledge indicator to see how knowledge is being spread and developed around the industry. And we look at awareness for Islamic finance in some of the key markets that it needs to operate in. And we capture that, we rationalize that, we create comparability between markets to see where different countries and institutions stand. When we look at the overall development of the industry, we see something that is very, very interesting, and you can see that in the global map, and that is that Islamic finance does touch, in some manner, some capacity, almost every country in the world. Yes, there is a concentration in key markets like the GCC, Southeast Asia, certain markets in Africa and Asia, but virtually every market in the world has some element of Islamic finance, whether that is banking, whether that is asset management, whether that is sukuk issuance, whether that is simply educational courses or awareness around it. It does touch everything. When we look at the ranking of the development of the countries, we see most of the countries in Southeast Asia, the GCC, some South Asian countries play a prominent role. What is very interesting is a couple of markets have really progressed in the last year in the indicator. The UAE has jumped 2 spaces to number 3. Pakistan has jumped 2 places to number 5. And what is the common thread amongst all the markets in the top 5 countries is that all of them have a comprehensive Islamic finance development strategy or roadmap that is being rolled out in those markets. Malaysia, through the relaunch of MIFC and other initiatives, has their Islamic finance strategy. In Saudi Arabia, you have embedded within the Vision 2030 a very prominent area for the development of Islamic finance in that market. The UAE has worked extensively last year and the year before in promoting sustainability guidelines and other sustainability initiatives, and is on the verge of launching their 7-year Islamic finance strategy to align with their Vision 2031. Indonesia, through KNEKS, has an Islamic finance strategy, and Pakistan has rolled out Islamic finance strategy to convert the entire ecosystem into a Sharia-compliant ecosystem. So we do see that having government-led strategies in place does impact the development of the Islamic finance industry in these markets. When we look at the global market, we see that the Islamic finance total assets in 2023 had nearly touched $5 trillion. It was $4.9 trillion across the different asset classes. It is projected to grow to $7.5 trillion in the next 5 years by 2028. We saw 11% growth in assets in 2023. We saw that Islamic financial institutions nearly reached 2,000 institutions, 1,981. And when we look at the breakup of the market, we still see the two segments that dominate: Islamic banking making up 72% of assets, Sukuk making up 18%, collectively making up 90% of the Islamic finance industry. And we will deep dive a little bit more into these two particular asset classes as well. So looking at Islamic banking makes up about $3.6 trillion in assets today, projected to grow to $5.2 trillion in 5 years. There's about 600 Islamic banks or Islamic banking windows that operate in different markets. So roughly 1/3, almost 30% of the total Islamic financial institutions consist of banking institutions. And we can see the top markets, as we would expect: Iran, Saudi Arabia, Malaysia there. Islamic banking actually grew a little bit faster than the overall industry at 12% in the last year. When we look at Sukuk, again, $860 billion in Sukuk assets outstanding as of the end of 2023, 9% growth. This is projected to grow to 1.5 trillion. And we see increasingly more and more non-OIC markets entering the Sukuk space as well, and tapping into Islamic capital markets to be able to leverage and utilize Sharia-sensitive capital to be able to roll out their economic development strategies.